Morning, Steve Free in Chicago with the morning grain comments. Markets are higher overnight. Yesterday was, as overall trade, one for the ages when the U.S. CPI inflation data came out high, but lower than expected. So we had sharp gains in the stock market and sharp drops in the dollar. Overnight, stocks are higher, the dollar is lower. Grains are actually higher. Beans taking back, corn, all the losses from yesterday. In the bean market, I think, first of all, we saw some new COVID rules out of China, a little bit less restrictions. I think the main thing is that if strict policies are imposed in certain areas, eventually, and as quickly as possible, they could get things back as far as life and work back to normal. And some people think that's going to increase their imports of raw materials, especially soybeans. Now, for the first time, U.S. soybean export commitment fell below last year. But we still think that for January, China needs to buy 2 to 4 million metric tons. Also in the beans down in South America, Brazil are still protests on the election, but more importantly is that the president wants no cap on spending. So there's no plan on revenue increase to pay for that. It could push Brazil into a recession. In Argentina, the government could announce another soy peso deal. In September, that increased farmers selling 7 million metric tons and also stopped overnight any farmer selling waiting for this new decree. In September, it was 200 pesos per dollar. The current rate is 160. This particular plan could be 220 pesos per dollar. South American weather is okay, so it's all geopolitical issues that might be helping soybeans gain today, whether it's China or South America. Over in the corn, again, we have a meeting in Geneva today to talk about the extension of the corridor. Some people feel that today Russia will not announce that they are in agreement to extend that corridor. He may wait to the G20 meeting. Putin is not going to the G20 meeting, but there could be a time around that area in which he could announce what he thinks is going to happen to the Ukraine export corridor. Right now, ships are moving out, in and out of Ukraine, and so this is kind of a big deal as far as corn numbers are concerned, with our export commitments running 54% behind last year. The Europe situation, again, their crop could be down 20 million tons. Their imports to date are up 7 million tons from last year. They could need to import 30 million tons of corn. So where are they going to get that from? And that might tighten the situation. Over in the wheat market, again, it's all about the lower dollar and the possibility of not extending the Ukraine export corridor. Russian wheat is still cheaper by a long way of U.S. wheat. And our wheat export commitment continues to run about 6% behind last year. So when we're looking at global S&Ds, corn might be getting tighter, soybeans might be getting tighter, but the wheat market continues to try to find out if this Russian bank is going to be given less sanctions and they can ship more wheat. Have a good weekend. If you know a veteran, please take them out for dinner or supper and express your gratitude for them serving.